The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the March 3rd terrific Tuesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Perseverance Rhodes, who knows for certain that each of us should always be pioneers of our future versus prisoners of our past. Hope each of you had a magnificent, a magical Monday out there. Let's make sure that you and I, that we do all that we can do to have a terrific Tuesday. Of course, the easiest way to do that is to always remember that life happens for us, not to us. You see, when you and I, when we make that one little shift out there, it means that you and I can find the gift in every set of circumstance that the universe is going to throw at us. That's really important, folks. That's really, really important. Now, the most important thing, though, is for you to know that I'm absolutely grateful for your presence here. I'm grateful for your presence. I'm here to serve you. So feel free to go ahead and pick up that phone. Dial on in at 877-927-6648. Of course, internationally, you can also call in 727-445-1044. That's the number out there. This is Terrific Tuesday. It's none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got Dow futures trading off about 30 points. They're trading at 18,217. S&P down about 4 points, trading at 2109. NASDAQ off 8 points, trading at 4468. King dollar back 2 pennies, trade at 95.45. Gold off $1.30. Silver down 12 pennies. Light sweet crude up 41 cents. A quick peek across the globe. Let's go see what they've got going on over in Europe. You've got the DAX off 11 points. The FTSE down 19, so no big deal out there. Sea of red last night over in Asia. Apparently, they didn't get the memo here in the U.S. You had the Nikkei off 11 points, so we'll call that flat. However, you down about a little over 2% last night was the Shanghai, down 76 points. The Hang Seng off 184 points. That's 0.75%. But let's go begin our day, as opposed to going ahead and beginning our day, taking a look at what's going on around the world. Let's go take a look at our markets. Obviously, all the conversation about the NASDAQ. The emails I've gotten is, hey, is the NASDAQ ready to go short? Is the market ready to, is that it? The top is in out there. Folks, first of all, I can't answer that question for you. If I could, but what we can do is we can go take a look at previous patterns, previous information to give us a gauge as to where we're at. Do I believe that the top is in? Not even close that the top is in out there. Could it be a short-term top? Yeah, sure. I most certainly can. But let's go take a look at really just price patterns out here. So we want to spend some time taking a look at the composite. Now, let's see. The first chart that I open up on my screen, so here's a weekly chart. Now, obviously, the week just began. So in the case of taking a look at the NASDAQ composite out here, not enough to take a look at what, we just had one day. But what I really want to do is I want to come back and we're going to take a look at the weekly, the monthly, and the daily time frames out here. And so if I come back here, again, here is the weekly. I want to take us back to 2007. You see, there's certain signatures that markets will leave up at their high. So here's at 2007. Then we'll go back and take a look at oops, son of a gun. There we go. So here we're at 2000. I'm just trying to expand this out. Hopefully you're watching us on TigerTV. If you're not, you're listening on your radio or your mobile device at TFNN.MLBI. Thanks so much. Oh, I guess I'm already back to 2000. We'll start off taking a look at 2000. All right, and then we'll go take a look at 2007. Here's the thing. The market communicates to you and I. And it communicates in a language, and that language is referred to as Japanese candlestick charting. You see, Japanese candlestick charting been around for like about 900 plus years out there. It is the one way that the bulls and bears can communicate to you and I. You see, the bulls and bears, in essence, they show up for work at about 9:30 each day. Now, this is with regard to the cash indexes out here, indices, market. So we're just taking a look at the cash. We're looking at the NASDAQ composite. And their responsibility, their role, to you and I, their role is to do nothing more than build signs. And those signs are bullish or bearish out here. The cool thing about this is that the market is going to, every market will continue to move higher. The earliest possible time that the market could reverse is when there's a sign out there that's some type of bearish reversal signal. Now, look, the reality is there is probably about 15, 16, 17 Japanese reversal candles out there. There's only a handful that you really want to pay attention to. The rest of those signals do nothing more than go ahead and fill up the pages inside a book so that you can buy a book that's, maybe yay thick out there. But the book doesn't tell you. The books that I've seen out there, they don't really tell you which ones that you need to focus in on and why and what to look for. But what I want to tell you is that if you understand Japanese candlestick charting, or you'd like to understand Japanese candlestick chart, I can save a lot of time. I'm happy to do that for you out there. I've got workshops that will absolutely go ahead and condense 10,000 hours of study into a 3-hour workshop, 6-hour workshop out there. But here's the deal. Markets are always going to continue to move higher, and the earliest possible sign, the earliest possible time that they're going to communicate a message to you that they're ready to reverse is when they give you some type of reversal signal, some type of bearish reversal signal. Do we have that? No. If we take a look at 2000 right here is March of 2000, and the high out here, as you'll see, is the 51.32.52. I still believe that level's going to go ahead and get pierced out there. What we can, and the date, by the way, that the high was formed was March 10th. We're at March the 3rd out here. Not that anniversaries matter or anything. But what you can see here is the first time that we saw any kind of reversal signal on a weekly basis was the week that ended on March 17th out here. You saw a little what's referred to as a bear separating line. In fact, the market tried to bounce back up on a daily chart. We'll go take a look at it. I also believe there was a little bit of a gap down. The market bounced up right into that gap, right? We talk about gaps. Gaps are your friends out there. They act as both resistance and or support levels to be able to identify. But look here, right here in the month of, this is March 31st. It's a weekly chart we're looking at. So March 31st, 2000, nice big old bearish engulfing. So you can see where the bears were camped out back here in 2000. Now, what we also saw, the pattern that we saw back here, again on the weekly chart in 2000, was we saw price moving higher with less relative strength out there. It's just telling you that the rubber band is stretching, and it just doesn't have the, all the king's horses and all the king's men being able to put the NASDAQ back together again. Now, I don't even know that even makes any sense out there, but I started with the rhyme. What it does tell you is that when markets are moving higher or they're moving lower, and they're doing with less momentum, just simply less momentum out there, it's something to be paying attention to. Doesn't mean that the market has to reverse, but when you do get one of those bullish or bearish sign, in this case here, because we're looking at highs, when you do get one of those bearish signs out there, it says you've got to beware. You've got to prepare for some type of pullback. So that was a 2000. It's on a weekly chart. That was a 2000 top out here. Let's come take a look at the 2007 top, see if there's something similar out here. Well, that's 2004. Well, we did see a retracement off of that, but I want to come take a look at 2007 with you, 2005. Come on, Steve, I'll get over there. These folks are they're sitting here waiting. Okay, so now we're at 2007. All right, the week that ended November 2nd, 2007. Take a look at this pattern here on a weekly chart. Price moves higher. Does it with what? Does it with less relative strength out there, and then forms what? We had our bulls and bears out there painting signs. Nice little evening star reversal candle formation out here. Right? Bearish reversal signal. In fact, you had a nice little bearish engulfing candle that took place here on October 19th, the week that ended October 19th, 2007. That said resistance was the top of the prior candle, since it was a higher high that was formed on October the 12th. That high out there was 28.34. You never saw a close above it. It was tested out here the week of November 2nd, but you never saw a close above it. That became resistance, and then boom. So you had that pattern back in 2007. So now let's flash forward to where we're at. You kind of see here, 2000, 2007, you see the patterns that are out there. Let's go take a look at where we're at right now. Do you see any kind of price, what Stevie likes to call price relative strength divergence out here in the market? The answer is no. We do not see that. We do not see that exact same pattern. If we did see that exact same pattern, it would say absolutely pay attention to what's going on inside of the NASDAQ composite. We do not have that. We did not have that. We do not have that at this moment. And if we take a look at a daily chart, let me put this on the daily time frame out here. Right, so we can get a feel for what's out here. Let me go ahead. I'm going to have to add a few more days as soon as this thing populates. I think I don't have enough days out here to get me back to 2,000. Yeah, 365 days is not going to do the trick, but let's just go ahead and put 20,000 days. That out 20,000 leagues under the sea. Let's go back and take a look. Sometimes these patterns will show up on a daily chart. Maybe they don't show up on a weekly chart. So you want to take a look at the daily, the weekly, the monthly to see if price is real. Is price moving higher and doing it with less relative strength out there? And if it is, you want to be paying attention to it. Now let me see how quickly I can get back to 2,000 out here. First, I've just got to find it. Where are we? We're at 1991. Stephen went back a bit too far. Let's see if we can find that 2,000. Where are we at right now? 2,000. Okay, we're getting pretty close. So we know it's March 2000. Oh, I think I probably passed it. Come on. All right, so here we go. March 10th. So here's the actual high. So we're looking at where my cursor's at. So March 10th, 2000, we got that actual high of 51.32. Now on the daily chart, we don't have that price relative strength divergence pattern, right? Price was just moving up. What we did get, though, at that top, at that high, was a bearish reversal candle. You got a shooting star. And you see, actually, on that very next trading session on March the 13th, so we had a weekend that came in on March the 13th, the NASDAQ composite gapped lower. So you've got basically two types of reversal signals out here. And in fact, he actually had a bearish engulfing. So as that top was being formed, it was at least helping to identify for you, just like any battle out here. And this is a battle between bulls and bears. That's all that it is, like playing the game Stratego. Right? I think it's like playing the game Stratego. I remember playing that, for 35, 45 years, probably something like that. But in any event, what we did have was we had an area of resistance that had set up. We do not have, and we would see the same thing if we went to take a look at the 2007 area. But since we're really talking about the 2000 levels, that's what's out there. And I want you to truly have an understanding of what goes on in the market. Take a look at the NASDAQ composite. It was also making that top in 2000. Out here, I want you to notice that as price was moving down, it's a daily chart that we're looking at. As price was moving down into March 16th, it made one of your favorite and my favorite reversal signals, made a hammer candle out there. That hammer candle, once the lows were taken out, that was also telling you, right? You know the expression, if you close below a hammer candle, if you're long, you're wrong. Well, just take a look at that other signal that was formed. So on the weekly basis, we had price moving higher, doing it with less relative strength out there, giving us a reversal candle on the daily charts out here. We saw these reversal signals as well. We also had a hammer candle that formed, and we saw price break below that. It actually closed below that level, looks like, right here on the trading session of April 3rd, 2000. So there's plenty of signals. There's ways that the market communicates to you and I about what it's doing. And if we flash forward to today, I have no idea what type of candle configuration we'll get today. What I can tell you is we do not have a reversal signal. Therefore, price can and will continue to move higher out there. This is Steve Rhodes. This is TFNN. Right now, Dow futures, they're trading up, trading down 32 points, S&P back 5. We'll be right back, folks.
Told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Check out the new look of TigerTV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Thinkorswim, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of TigerTV, then visit TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Not much change here, obviously, since we went to a break out there, but hopefully that helps to keep things simple. Keep things in perspective for you. Nobody's got a crystal ball out there, but nobody needs a crystal ball really to be able to call the markets or have the markets communicate to us or be able to read the message of the markets out there. This is not a business, nor is it a game about trying to sell the top tick or buy the bottom tick. The idea is to try to understand when changes in trend are going to occur. Go ahead and get your stops in place, get your trade in place, get your, adding to your positions, whatever that might be. And the most important thing that you need to understand, in my opinion, one of the most important things that you need to understand is how that market communicates to you in those Japanese candlesticks out there, along with other patterns. You've got to really be able to put both things together. If we take a look at other patterns as an example, we look at the DAX. Now, these markets here, I'll switch over. Let me just, before I go right to the DAX, let me do this here. And the importance of why I'm going to go to the DAX and then go to the FTSE and take a look at it is because, as you can see by taking a look at this chart here, the top portion of that chart is the DAX. The center portion is the FTSE. So we're taking a look at Germany, we're taking a look at the UK, and the bottom portion is the S&P 500. You can see the similarity in moves that are going on inside the marketplace. Is it always there? Is it 100% consistent? Absolutely not. but is it primarily consistent, directionally consistent for the most part? And the answer is yes. So when we take a look at that, now that means because the DAX has been trading for, several hours out here, same with the FTSE, most of its trading day is gone. It's just got another couple hours left in the trading session out here. Now, with regard to candlestick charting, you've got to wait for the actual time frame to actually complete before you can really call what's going on inside the market. So with 2 hours to go, the candle that we're going to go take a look at in the DAX just really may not apply out here. But what we do know about the DAX is the following. Number one, when we take a look at it, it's made a nice A to B, made nice lightning bolt pattern, nice A to B equals CD pattern. The A point was all the way back down here October 16th. Okay, our market's made a bottom October 16th. The B point out here was December 5th. Our markets made an intermediate term. Some of the markets made an intermediate term top on December 5th. Makes a retracement, makes a 50% retracement. Price gets all the way up to the 1-to-1 level out here at 10,957. Really nothing in the way of any kind of significant reversals. Yeah, a little shooting star, set up resistance as it made the 1-to-1. A little hanging man candle, which is not a bearish reversal signal out there. But in any event, it looks like a hammer, smells like a hammer, and just really should be thrown in the trash is what it should be doing. Now what we've got out here, as price moves up to the next level, that next level, taking it to the next level inside the DAX was a price projection of 11,429. What did it do yesterday? It hit the 11,429 area. Actually got up to a high. Its high yesterday was 11,455, closed out at 11,410. And it formed a little doji candle. So now, because it's at all-time highs, we don't really have anything on the left-hand side of the chart to say whether or not that's a resistance level, because doji candles have a whole lot of meaning at resistance. What we do know is that today's candle will be pretty easy for today to form some type of bearish engulfing candle, because all the candle has to wrap around is basically yesterday's open and close. Yesterday's open, by the way, inside of the DAX was at 11,408, and the close was at 11,410. So you got a little 2-point band out there. So not really much going on yet in the case of a bearish reversal signal. If we do not get a bearish reversal signal inside of the DAX, which just simply would suggest that the market would go ahead and begin some type of retracement, the next level for it is 12,031. Your 1-to-1.618 A to B equals CD. You see the lightning bolt pattern, the A to B equals CD pattern, it's really kind of our tape measure. It's our tape measure guide that helps us to project where price is likely headed to. It's one of the best leading advanced indicators, and not it's so much an indicator. It's the best price projection tool that is out there, and there's so much to be able to learn about that C to D leg. All you got. The cool thing about this pattern is that the market does 75% of the work for you. If you'd like to learn that as well, I've got that included with the last workshop that I did. You can gain access to it. You can send me an email, Steve at TFNN.com, and I can help you get set up. It just depends on what you are trying to do, whether or not you want to empower yourself to allow these markets to communicate to you. If we take a look at gold here on an intra-day, intra-time period basis, if I look at the gold contract, you've got gold right now up 30 cents. Now, what gold has done on this nice little 30-minute chart out here this morning at, it was last night actually, at 9:30 in the evening. It made one of those seventh wave moves to the downside out there. Looks like we're in the process of getting a nice, maybe a little bit of a bounce out here inside gold. Gold still has more room to run to the downside out here, but I think it moves a bit higher. A little bit of a retracement, maybe even an A to B equals CD pattern to the upside. This is Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar is ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
We're off to the races. We got the Dow up 46 points, trading out of 18,241. S&P down 6, trading at 2111. Composite off 17 points at 49.91. Russell 2000 down 4. You've got the DAX off 19. FTSE down 18. Gold's up $4. Silver up 7 pennies. Light sweet crude up 12 cents, leading the charge to the upside. You've got Leaf Holdings out there. I believe Leaf Holdings buying out, what do they got out here? Citigroup sold One Main Financial to Springleaf. That's up $12 out here, up 31%. Nutrisystems up 13%, up $2 and change. Intrexon, XON, N as in Nancy, not M, is up a nice 5% this morning, up a couple bucks. JD.com up 6%. Boeing is up a little under 1% this morning. C.H. Robinson Worldwide up 1.5%. Dick's Sporting Goods up 1%. To the downside here, you've got Acorn, AKRX. That's off 8%, off $4. Prime Morris S Services looks like. Prime, PRIM, is the ticker symbol. Ooh, down 17%. Palo Alto Networks down about $2.75. Ambarella off $1.70. Amazon is down $1.76. Tesla's off $1.60. We'll take a look at Tesla today. Norfolk Southern down about $1 as well. That's all that is moving in. Well, everything is moving in the markets here this morning. Let's go take a look at some of these things that are moving to the downside first. Let's take a look at Acorn Inc. So they've got some issues out here. They needed an extension for filing their 10K. That's not really that big of a deal out here. Of course, why can't they get their accounting done in a timely fashion out there? But what we do know about this equity here, it completed a 1 to 2, probably even a higher, maybe 1 to 1.2618, A to B equals CD. But this thing here had some, if this thing continues to fall out of bed, it ought to find some pretty decent support. There was a transaction, the day of January 30th, had 11 million shares. Big, wide-ranging volume bar out here. Not so much with regard to wide price spread, but that level should be a place where Acorn would find some support. 41.81 to 43.46 out here. Right now it's at 49 bucks, gapping down. A pretty good volume behind the move so far, 700,000+ shares as we speak right now. If we take a look at Primoris Services, PRIM is the ticker symbol. Let me see, what do we have out here? Oh, so they've acquired somebody. So let's not take a look at that. Let's take a look at Palo Alto Networks out here. They looks like they had a second quarter loss, 53 cents per share versus 55 cents. I don't see the actual numbers. Doesn't matter. Let's go take a look at Palo Alto Networks. Moved down just slightly this morning, but we're not seeing anything in the way of damage. So you've got, here's the resistance level. We're talking about reversal candles and everything earlier this morning. So as Palo Alto Networks made a high out here on the trading session of February 26th, that high, by the way, was 146.28. Made some nice little shooting star candle. That's the opposite of your hammer. You're going to make that up at highs. That says that is resistance. In fact, it makes a little bit higher high. Doesn't close above that level on March the 2nd. There were 3 million shares, pushing to 1.7 million shares. So that's pretty good, but that still becomes your line of resistance. If we take a look at Palo Alto Networks at 146.28, a close above that would be extremely bullish. Now, if we look at other patterns, that lightning bolt pattern out here, this has been a strong looking stock ever since the lows that were put in back in May of 2014. And let me put this let me move this over to a weekly time frame. We'll make the A to B equals CD pattern that we're going to look at a whole lot easier. Well, how about that? Just simply coming off of the bottom out here. So coming off of the lows back in 2013, it's made a little bit more than the 1 to 2 A to B equals CD to the upside. I'm going to look at the smaller pattern out. I'm going to just go ahead and delete this one, the one that we were trying to gauge a little bit. Man, let's see, it's this one right here. I guess we'll take it from the 2014 level and just trying to give you some price projection areas for Palo Alto Networks. Our A point's going to be down here. Looks like around May 12, 2014. The B point that I'm going to use, I'm going to come right up here and grab this guy from September 29th, the week that began September 29th, 2014. It's a little pullback into October. And so it looks like Palo Alto Networks, if it can take out the 146.28 level, take a look at, he had a little doji candle last week up here. It says about the 150.56 area is where it should be able to target if it can close above 146.28. Above that level, that brings the 167-ish area into play. PANW is the ticker symbol. That's taken a look at the weekly chart for it. Let's look at also moving to the downside. Let me see, what do we got percentage-wise? Anything that is really significant that sticks out? And the answer to that question is no. Let's look at Alibaba, BABA. Again, not a ton of information here for us to be able to for us to be able to look at patterns, but there is an A to B equals CD pattern to the downside that it's in the process of. And we can see as it made that 1-to-1 A to B equals CD, which was down on the trading session of January 29th, the gap down into that D point, that was suggesting that it wanted lower price out there. That was its message to both you and I. Now it's down below the 1-to-1.272 level. We don't see any real bullish reversal signal. Here was your first bullish reversal signal as it was moving lower. That took place on February 25th, but no follow through. You know, without any follow through out there, it's just like you're all talking, no, I don't know, all talk and no walk. That doesn't make any sense, right? But just simply all talk. You want to make sure that you got follow through on any pattern is that you're trading. What we know now about Alibaba, it's now trading below. So everybody inside this equity at this moment, at this very moment, or very close to this very moment, everybody as a holder of this equity on the public market out here at the IPO is in a losing position. The actual low was 82.81. That took place on October 15th. You're at 82.19 as we speak right now. So so the question becomes, hey, if you're a big believer in Alibaba and you want to buy into this thing, your question would be, is now the time? My answer to you would be, no, it's not. The time would be when you see some type of bullish reversal signal and when you see some type of follow-through. Otherwise, you're just going to get caught up in what took place on February 25th. Now, if you're a person that's trying to scale Mount Everest, if you're a person that's trying to buy the bottom tick out there, you know, that's a whole different game, and it's a game that I'm not even going to. That's a whole mystery of trying to actually figure that one out. Instead, I would imagine anybody looking at Alibaba would be looking at it from a longer-term picture. So just wait until you get some type of reversal signals. We do not have that in play for Alibaba as we speak. If we take a look at some of the, let's go take a look at Nutrisystems out here. NTRI is the ticker symbol. That's up 15% this morning. They had fourth quarter revenues of $79 million versus $69, so they grew the top line. Net income of $5 million versus $1.3 million out here. Let's go see what Nutrisystems is trading into. So volume so far this morning, 303,000 shares, moving into a swing point, a B point, by the way, which is takes you back to December 29th. And that high is $19.97. You are right now trading at $19.84. So the volume out there, that's no problem. So if Nutrisystems can close above $19.97 as we speak today, that's going to give you an A to B equals CD price projection. The 1-to-1 on that is going to take you up to approximately, let me see right here, that's going to take you up to a price level of $21.95. And I would say if it can close above that threshold level, if it can close above that $19.97, you're looking at $23.33, more likely than $21.95 out there. Nutrisystems, and it's also at its all-time highs out here. I think that is. Let me pull this back and put it on a monthly chart. It's at 50. Oh, it's not at all-time highs. It was at a 52-week high out here. Boy, Nutrisystems, this thing has is really got a lot of work in order to be able to get back to its highs out here. Its highs are back at about the $76 price range here at $19.77. So if it does get above that level, that 1974, something like that out here. Now that I pull this back even further, what it really needs to do, it needs to close above 2054, and that takes you back into 2013. We were not looking back there. So any close above that with more than 10 million shares, that would set up a weekly A to B equals CD to the upside. And you've got some real resistance inside of Nutrisystems out here at a price point from December of 2009, right around the 33.54-ish type of mark out there. NTRI is the ticker symbol. Also moving to the upside, let's go take a look at Boeing. Boeing has been extremely strong out here. I will go ahead and leave the monthly chart up on our screen here just for a moment. So you've got Boeing moving higher this morning. If we try to get a feel for where Boeing's going, let me get rid of this retracements out here. Let's not pay attention. Here's what we know about Boeing. Boeing had this little key. This is a monthly chart, by the way, that we're taking a look at. So you talk about the markets being able to communicate to both you and I. If we take a look at the trading session from January of 2014, nice little key reversal, nice little bearish engulfing. The bears really camped out here. And as soon as price got above that, boy, that was the moment of truth that Boeing wanted to move higher. Now, with regard to that swing point also, it had 114 14 million shares, and price came through it with 109, then 92 million last month. So you're not exactly above that with volume out there, but the resistance level, which it has broken above 144.57, should be any kind of support on any kind of a pullback out here. It's a price projection. It's longer term price projection. I wish that this thing had a, whoops, didn't mean to do that. Wish that this thing had a confirmed. Wish that it had taken out its B point with volume. But over time, what this chart is communicating to both you and I is that Boeing is going to want to try to move up into the price level of $200, $204.88 to be specific. So look for any kind of a retracement down to the 144.57 level. If it can do that, if it can hold that, that might be an area that you would want to take a look at taking a stab at Boeing, BA being the ticker symbol. All right, so we've taken a look at some of the equities. Let's go take a look at the currency market out here. Let's go take a look at what's going on inside of the euro. So you've got the euro right now trade out at about the 111 area. Yeah, this is the monthly chart out here. Nothing good when we take a look at the monthly chart. But let's switch back to the daily area. A daily chart out here. Still, the area of focus. Now, this bodes well for the bulls versus the bears out here. Now, what I mean about that is we take a look at the daily chart. We know we've got a swing point low from January 26th. That swing point low is at 1.109. Now, a couple trading sessions ago, let's see, this is Tuesday, so Monday, Friday, Thursday. Last Thursday, there was a little panic selling. I don't know, it was really panic. I wish I called it panic. There was just simply some selling inside of the euro out here, and it moved price right back into that swing point. And anytime price gets into a swing point, it typically wants to gravitate and go test that swing point, whether it's the high or the low. Now, what I mean about that is when price is moving down lower, it typically wants to go test the low of that swing point. If price is moving higher, it wants to go test the top of that swing point. So inside of the euro, it has not proven itself that it's any kind of bullish move or reversals out here. The reason why I say that it bodes well the last two trading sessions, I don't know what today is going to look like when it's all said and done, but you've got a couple of small body doji spinning top-ish type candles out there. And again, they don't really have any meaning to me at markets are moving lower. Only at higher do we take a look at the doji candles out there. But what it does do is it does help us to communicate that the sellers have lost any kind of momentum. So ideally, what you'd really love to see is you'd love to see that swing point low from January 26th get tested, get rejected, then see some kind of bullish signal come in out there. Now, that's what's going on inside the euro. Let's go take a look at the Great British Pound. Of course, the Great British Pound has been much easier to trade because it's given you the best bullish reversal signals out here. And at this stage, this thing has broken through its descending trend line, so that's a beautiful thing. So it's broken its trend, did it with conviction. Right now, what we're looking for is for the Great British Pound to go ahead and make its another retracement. It's made two retracements on its move off of the bottom. This is the third retracement in essence out here. And ideally, you'd like to see the Great British Pound get down to about the 1.532 area. If it doesn't hold that, then price is going to likely move down to about the 1.518 area. But this thing is slated to move higher out there. I got the memo on that. I don't know if you got the memo as well. That memo says that the Great British Pound wants to move up to about 1.580. And that's nothing more than a dead cat bounce. It's nothing more than a 0.382 retracement from the highs back in July 15th to be specific, all the way down to the low that was put on January 23rd, 2015. That is what's going on inside of that currency pair. Let's go take a look at, so we mentioned gold, but let's go take a look at gold on the daily basis. Just simply looked at gold on the shorter term, on the 30-minute chart. In fact, let's go put the 30-minute chart back up on our screen here. The pricing is off just by a tad here, just because of a little bit of a delay. But what you're doing down on the 30-minute chart, you've got gold trying to take out a potential B point of an A to B equals CD to the upside. If we take a look at what that would be, your A point is down here from about 9:30, as I mentioned last night. Your B point of the A to B equals CD move, we're going to give it right up here. Looks like about 1:30 this morning. And your C point down here right about 9 o'clock as we came on the air. So if gold continues to trade above the 1210 area, what you should look for is gold to make a move maybe to 1221. maybe not all the way back up to its highs out there. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Steve Rhodes as he teaches techniques on technical analysis using pattern recognition, celestial charting, Fibonacci, and other tools. The Trader's Edge, next on TFNN.
Welcome back, Folks, Dow's off 90, about 91 points right now, trading out at 18,198. S&P's off 12. Composites down 31. Russell's off 10 points out here. Let's kind of summarize. So what is it that we know? Number one, we know that back in 2007, what the NASDAQ composite did was, as it was forming that price top, it was doing it with the patterns that have been around since charting began. I would tell you that the way that I identified that pattern was I was searching for what formed these significant tops in the markets. I built some software to go test every lunar strategy, every celestial pattern that I could identify to see if we could have some consistency, some early warnings, because those planetary alignments, by the way, which I believe we have one that might come and play, if not today, tomorrow or the next day. But that's neither here nor there. But I was just looking for some, and because those planetary alignments are already basically, you can look out as many years as you want. You can look back as many years as you want. I couldn't find a consistent pattern out there. Nothing that gave us a high degree of probability. But what I did notice, back and take a look at 1928, back and take a look at the crash of 87, looking at the tops in 2000, looking at the tops in 2007, is they did have a consistent pattern. Price moved higher and did it with less relative weakness, or less relative strength out there, and they gave you a bearish reversal signal. We do not have that in place as we speak. So any kind of a pullback, and the market should pull back. In fact, the market, what it ought to do here, it ought to just scare everybody. It ought to be in everybody on the tube saying to pack it in. The market made it back above 5,000 the composite, and everything is going to fall apart. Just enough to scare it, just enough to keep getting the market, maybe in a quick way to move lower out there. But if today is the beginning of such a retracement, then what you want to be doing is you want to be loading up the truck, looking to be able to buy that next bottom out here, because that next bottom is going to take you higher into May, into June, into July out there, and those are the patterns that exist inside of the market. So, folks, if you're off to start your Tuesday, have a terrific Tuesday. Stay tuned. You've got the market update by Tom O'Brien. That's coming up here, and then, of course, I'll be back with you at about 10:07. Take care, folks.